professor of applied economics, Steve Hanke of Johns Hopkins University, and he joins us from Baltimore. Professor, a lot to talk about, but let me begin by just getting your takeaway to today's announcement.
Well, the first thing, Asieh, it's great to be with you. Clearly, the Trump threats didn't rattle the Fed. The Fed did essentially what they wanted to do, a 25 basis cut. That was, as you indicated, very anticipated. The probability of that 25 basis rate cut was 96.3% last night. So they did exactly what the markets thought they were going to do. And the markets now are indicating that in the October meeting, there's a 96% chance there'll be another 25 basis point cut. And in the December meeting, a 91% chance of yet another 25 basis point cut. So this is kind of on the Fed's schedule. The Fed basically has all the cards. Trump doesn't. Trump's making a lot of noise, but the Fed is pretty much doing what it wants to do. They're focusing a lot, by the way. You could hear the chairman in the clip you had focusing on the labor market, which is starting to get soft. They're not focusing on the money supply, which is really the key thing. The money supply, measured by M2s, only growing at 4.8% per annum. And according to my golden growth rate figure, that should be about 6.3%, a rate consistent with hitting the 2% inflation target.
Well, Professor, if I'm a consumer, if I'm looking to buy a house, if I'm looking to borrow money, how soon can I see the impact of these lower interest rates?
Well, I don't think you're going to see much of anything, quite frankly.
Okay.
I don't think it's going to change. It's not going to change things much because this rate is a rate that's an overnight interest rate that's controlled by the Fed, the Fed funds rate. And mortgages are all hinged and based off the 10-year yield on the U.S. Treasury bond, the so-called 10-year. So we'll have to see what's going on with the 10-year, and I don't think this change will affect it very much.
So you and I have talked about Donald Trump's sweeping tariffs before. How do those play into the current state of economic uncertainty, if you will, here in the U.S.?
Well, it's a huge question mark, Asieh, because the Court of Appeals has indicated that the emergency powers that the president invoked so that he could put in these reciprocal tariffs is illegal, which I think it's obvious it's illegal. The trade deficit isn't creating an emergency. We've had a trade deficit every year in the United States.
So, Professor, are you more worried about these tariffs than you are about inflation, if you will?
Yes, I think the tariff question is a big one because number one, they're bad in and of themselves. If they all stuck the way that they look like they're posed right now, it's bad. But you have to add uncertainty in there because this case will be going to the Supreme Court on a fast track, and the Supreme Court might knock the whole thing down, ruling in favor of the lower court. And if that was the case, we'd have to Trump would start the whole thing over and have to have some other rationale for having the tariffs. So it would be game over, new game startings. So that we could be facing that around the first of the year.
So let me quickly, before I wrap things up, let me go back to the Fed's decision today. As we were talking to our reporter about, Donald Trump has repeatedly threatened Jerome Powell. I mean, the attacks got rather personal, calling this man stupid, every name in the book. Do you feel like the central bank can still maintain its independence and credibility, especially with constant criticism and political pressure from this White House?
Well, the Fed seems to be holding the line, and that's what this 25 basis point decrease indicated. Remember, the president wanted a 3 percentage point, not a quarter of 1%.
Right, but I guess my point to you is the next time the Feds meet, are they going to be under increased pressure to once again raise interest rates because of Donald Trump?
No, you mean lower interest rates?
Lower, yes.
Yeah,
Forgive me.
yeah,
Yes, lower.
the pressure will continue. You can bet your bottom dollar on that. There'll be massive pressure, and the markets think with a 96% probability that the Fed will hang in there and not get rattled by Trump, and they'll only have another 25 basis point reduction at their October meeting. So that's what the markets are pricing in right now. So I'm just telling you what the markets think.
Understood. Understood, Professor.
And I think that's always the best thing to do. Everybody has opinions, subjective opinions about this thing and that thing. The best thing to do is look at the Chicago Mercantile Exchange and the Fed funds futures market and see what the market is. What are the real players and the buyers and sellers? What are they doing? And they're saying it's going to be 25 basis points again in October.
All right, and just for the record, the Dow right now is up more than 276 points. Steve Hanke, as always, a pleasure, sir. Thank you very much.
Thank you.